Are Bitcoin treasury companies the new dot-com mania? Are they the speculative NASDAQ companies of our era? Will they have the same fate as a lot of those companies, or is there something fundamentally different about buying Bitcoin and putting on your balance sheet and basically adopting Bitcoin, as opposed to these companies that adopted the internet by buying domains or putting their stores online? My name is Forrest Hodel. I'm a Bitcoin educator and coach. And if you need to book a one-on-one with me, you can do so in the description. We can talk about Bitcoin security, best practices, and I can help you out with any of your Bitcoin needs. The reason I talk about this subject right now is because there seems to be a new Bitcoin treasury company pop up every single week, or even more. There's Asset, which is a company that Strive Capital Management is taking over and turning into a Bitcoin treasury, and they have this idea of buying other distressed companies that are trading below their cash balance and turning those companies into Bitcoin treasury companies. There's 21 Capital, headed by Jack Mallers of Strike, with the intention of becoming a pure play Bitcoin treasury company and using equity, using creative financial techniques to acquire more Bitcoin and issue debt and build businesses on top of Bitcoin as well. And of course, there's the big dog in this conversation, which is MSTR. The Giga Chad Sailor has been buying Bitcoin since 2020. They've accumulated over 538,000 by my last check here. And they have no ability to stop at this point. It seems like it's a runaway train. It seems like every week they are buying Bitcoin, and in fact they are basically every week, and Saylor announces it. So the real question that comes into play when we start comparing it to the .com is MSTR the Microsoft? Is it the Amazon? Or is it the pets.com? Is 21 Capital the pets.com? The newcomer to this stage? Are they going to over-lever? Are they actually creating something of value here? What is the similarities? What are the differences? Now, with the dot-com bubble, I think a lot of that was driven by the idea that when you were buying into a company and they had all these domain names, they had these storefronts, they had businesses online, that you were sort of buying into a piece of the internet, not directly, but you were taking over that part of the domain, right, of that internet. So pets.com, famous example. Their attempt was to take over the pet industry sales, so PetSmart basically online. And they would, ship out food and toys and all this kind of stuff was sort of part of their intention. But what it turns out is that these kind of things are very competitive. Now there's actually a company that was quite successful doing that. It's called Chewy, right? And but the thing is it wasn't linear, and it wasn't winner takes all. There was no moat created by setting up a business online. It was a very competitive space because you weren't actually buying the internet protocol. You were buying space built on top of the internet. Now, with Bitcoin, you are actually buying a scarce piece of the protocol, the Bitcoin on the ledger that exists and that you can't make more of. With the internet, you could duplicate websites. You can buy very similar domains. Domains do have some value, right? But you're paying anywhere between 10 and thousands of dollars for them, and they're non-fungible. They're all unique and different. And that because of that allows for a lot of competition. Because something is different, people can compete against it. Now, with protocols, you have to understand that protocols, once they get entrenched, they become dominant. And it's just like the internet. So the internet protocol has all of the internet that we see today built on top of it with additional technology that all goes back to the base layer of internet, which is transmitting information. Now, how we see that information is part of the protocol or the technology stack that is built on top of the protocol. So we can see something very similar with Bitcoin, and we can see that Bitcoin is this very secure protocol, financial protocol that can be used as base layer money And we can see that technology has been built on top of it with layer 2s and side chains like Lightning and Liquid that allow for different types of functionality that is ultimately settled on the base layer of the protocol and uses the base layer of protocol for the additional use cases that they provide. Now, you might be thinking right here, if you come from this, the crypto space, maybe you can see that crypto has tried to capitalize on competing in protocol space. They can say, oh, well, we're developing Web3, ETH, we're the internet's computer, we are ultrasound money, we're competing on all these different layers. Web3, DeFi, so decentralized finance, NFTs, we can create that, which you can own some sort of ownership, have some sort of claim of ownership to something that is put into the blockchain of these different technologies. Now, none of that competes with Bitcoin. That's what's very interesting about this. Those are all technologies that are competing against each other. Those are almost like pets.com. Crypto is like the internet companies of the .com era. And Bitcoin is fundamentally different. It is the internet itself. And what makes Bitcoin unique in this case and different than the .com era is you can buy a piece of the protocol. When you were investing in pets.com, even when you were investing in Amazon, the winners of the .com mania, you were still not buying a piece of the actual internet protocol. You were buying a layer 2, layer 3. You were buying into a share of a company built on top of that protocol. So with Bitcoin, it's fundamentally different. You can actually buy a piece of the protocol, right? And that is incredibly valuable because that is incredibly limited in space. There is only so much space and units of the protocol. So in my opinion, just as every company needed an internet strategy, every company today needs a Bitcoin strategy. So there were many companies in the .com era that really exploded in valuation. They were overvalued. There was a lot of hype and trading and speculation on that. And a lot of those companies collapsed. A few of them, made it through with large drawdowns, 90% drawdowns, all of this. However, all of those companies from that era that survived still have an internet strategy. They're fundamentally tied to the internet. And in fact, all the legacy businesses as well all have some use case for the internet, whether it's just a web page, communication through email, right? These are all, technologies built on top of the internet again. So in my opinion, and the opinion of many, and the opinion of the market, it seems at this point, they all as well need to adopt this new protocol, which is a financial protocol as opposed to just a communication protocol. However, financial is also a type of communication as well. The Bitcoin network is just transferring data and sharing it and publicly broadcasting it and decentralizing it. And that is something that we need as companies. So the reason for adopting an internet strategy for all these companies was largely to gain more customers, to have a presence on this new space, this digital space, maybe to increase efficiency, right? Sending emails instead of sending physical snail mail or transferring that throughout the office and just being able to send an email, a text, right? All this stuff at this point relays over the internet. So adopting Bitcoin is similar, but its use case is so that the wealth of the company, the balance sheet, doesn't get eroded by the money printer and the money debasement, right? Everything in the world gets more expensive. All the input costs, the wages, everything gets nominally more expensive because there are more units of currency. But with Bitcoin, that is not the case. Everything becomes cheaper because the amount of units of Bitcoin is fixed at 21 million total supply. The other thing that I've already mentioned here is that by adopting Bitcoin, you are claiming a piece of scarce digital property that all other financial instruments will get built on top of. Just as the typewriter became obsolete and replaced with computers, The US dollar denominated balance sheet is becoming obsolete and being replaced with a Bitcoin treasury. Now, what's interesting right now is we are in this space where this is still a new concept, and Bitcoin in the traditional lens is viewed as risky, speculative, and holding it as reckless. When I believe the exact opposite is actually true, it's reckless and irresponsible to not adopt it at this point. Now, the reason for that is because today's balance sheets are built on liabilities. Now, they're viewed by the holder, right? The company that has the balance sheet, they view their balance sheet as assets. But because they're assets, they're somebody else's liability because they're typically debt instruments like corporate or government debt. Now, Bitcoin completely de-risks that. Bitcoin is not somebody else's liability. It is truly a bearer asset. It does not have a debt attached to it. It is just pure. It's pure. So it actually de-risks you from the typical risks associated with a liability type asset or a debt instrument. Bitcoin is thermodynamically sound. If you don't know what that means, you should look into what that means. But basically, it means that it can never get unknowingly or uncontrollably debased away. That value is retained within there. There's nothing eroding it from, there's no leakage happening. There's no thermodynamic leakage. It is pure energy and it is stable. So in my opinion, the average company to sustain itself and to grow into the future at this point, however this window is closing, they could responsibly adopt something like an 80-20, right? There's this universal sort of rule out there, the 80-20. So 80% fiat, which will cover operations and all of that still, while we still have fiat, and 20% Bitcoin. And this is a treasury strategy that acts as a hedge. 20% might not seem like much to the maxis, but it will seem like a ton to the uninformed TradFi lens approach to this. And this will, at this point, this will actually make you grow into the future. At a certain point, when you're playing catch up with an 80-20 type portfolio or balance sheet like this, it will not be enough. You'll have to adopt more because you are leaking so much energy through holding fiat, which is the case, but it can still be okay right now because the adoption phase of Bitcoin will compensate with an 80-20 portfolio like this. And you will outperform the vast majority of your peers within whatever space and industry that you participate in as a corporation. I think as this becomes more obvious, we will see balance sheets and capital structures get really creative, and this will allow markets to reward the companies that acquire Bitcoin or acquire the most Bitcoin and hold it safely. So let's get into a few of the examples of some Bitcoin treasury companies and how they might look and feel like the dot-com mania right now. So we can see that MSTR strategy has already been rewarded for this. As I said, more than 500,000 Bitcoin. Their share price is incredible. I think last year they were the highest performing US equity, and Metaplanet, another example, right? So we kind of go down, we can see all the different Bitcoin treasury companies out there. Metaplanet having uniqueness within the market because of where they are located in Japan, where they have cheap access to debt. They have demand for a Bitcoin exposure where it's unfairly treated through capital gains and regulation on an individual level. People can expose themselves to it in a security form and actually benefit in a tax advantaged way. And they also have a very small balance sheet to begin with, very small company to begin with, so they can really elevate the amount of Bitcoin that they've been able to acquire, and then therefore grow really rapidly compared to the larger entity in this space, which is MSTR. There are other, Bitcoin treasury companies entering the space, like I said, every week here. 21 Capital is an interesting story. They plan to be a lot more pure play, not have an operational business, but build a Bitcoin related operational business on top of the act of just acquiring Bitcoin as their main focus. Strive Capital Management, a successful ETF issuer and company out there, buying the company Asset, and which is like a, TikTok and influencer type marketing strategy company, and turning that into a Bitcoin treasury and turning it into an engine of acquiring Bitcoin and acquiring companies to buy more Bitcoin over time. Another one maybe we should talk about that I think is actually a very important recent addition. They're the second U.S. equity to acquire Bitcoin, but they recently gave a speech at Strategy World. The CEO of it, Eric Semler, and I'm talking about Semler Scientific here. They were the second to adopt Bitcoin Treasury company. They've been able to acquire Bitcoin very rapidly. They've been able to have, a cash flowing business for a while with their QuantaFlow medical product. And they basically have elevated their stock price quite a lot by adopting Bitcoin. Now, why I brought up the Strategy World is because Eric Semler talked at Strategy World, did a keynote, and twice in the speech, and it was quite pronounced, he mentioned that they were the most leveraged play on a Bitcoin treasury company at this moment, and therefore they have the most upside potential in a bull market. Now, what's very interesting about that is I'm not the only person that heard and recognized what they're saying there, and leverage is risk, right? Leverage is risk. We can debate, in this case, how risky it is. We can debate whether we value that leverage or not. And that's for the market to decide, as market participants do. However, what that signals to me is that there will be other companies that see that and say, well, Semler's been rewarded for their additional leverage. We're going to even go more than that. And that's going to be our main selling point. Now, this is where it goes into, just further out on the risk curve, right? A lot of the mania in the .com was further out on the risk curve. There was maybe a lot of that was hype and speculation. And I would actually say that the foundation of the Bitcoin treasury companies are much more secure than the foundation of being an internet company in the early 2000s or late 90s. And that is because it is built on, again, owning a piece of the Bitcoin protocol more so than building on top of it. However, with that, there will be companies within this space that operationally make mistakes, or their balance sheet they make mistakes, custodianship they make mistakes. There will be mistakes within these companies that will cause individual ones to suffer or potentially even implode and go bankrupt. So just like in the .com bubble, not everyone made it, right? Only the strong survive. And there's going to be additional places of outperformance, of speculation, hype, mania, trading, just ability to get in, get out, all that stuff, and go out on further onto the risk curve within the crypto world, but not actually have to participate in the vaporware and hype and basically scamming that is cryptocurrency besides Bitcoin. So in my opinion, this fills a much needed need of outperformance of trading instruments, but it's all built on something very, very secure. Now, it's really just about us as individuals to look into how securely they're able to actually hold that Bitcoin. That's why I said it's not about just what company out of these Bitcoin treasury companies can acquire the most Bitcoin, percentage-wise, ratio-wise, any of that. It's about that, right? That's the reward side of it, but it's also about the risk. Who can actually hold on to that Bitcoin, right? So risk and reward, those two things should be the main way that you evaluate what something is worth. And therefore, then you can go forward and make your decisions with clarity. And Bitcoin Overflow on Twitter said it really well when he said, Bitcoin treasury companies are not Pokemon. You do not have to catch them all. This means that you don't have to buy every single Bitcoin treasury company that UTXO Management, which is an investing company tied to Bitcoin Magazine, ends up creating, because what they're doing is they're investing in these public companies and turning them into Bitcoin treasury companies. How much value there is within that is to be seen. I'm sure they will outperform many companies, but we do not need to just spray shot out into the Bitcoin Treasury field here, because there will be outsized risk on certain ones, there will be outsized return, and it's for you to evaluate that. But again, just be cautious in this space and recognize that these companies are building on the soundest, most thermodynamically sound protocol and money, and that in the future, they will all trend towards their Bitcoin balance and their ability to acquire Bitcoin. And that goes for every company in the world, in my opinion. And there are many large, massive companies that people value a lot that have 0 Bitcoin on their balance sheet. And therefore, they will be playing catch up. And if they're playing catch up, that means they have a lot of room to go down in their valuation. So, I know that personally, everything I own is Bitcoin or Bitcoin related. And if you want to get yourself some Bitcoin, I would recommend checking out Bitcoin Well. They're a non-custodial exchange, which means when you send them dollars, they send you Bitcoin directly. And you can get some free Bitcoin on sign up by using my link in the description. And again, I'm a Bitcoin coach. If you've even if you're just a small business and you have some questions about adopting Bitcoin on your treasury, I could just share my experience, my knowledge on that, and any other questions you might have. Link in the description for that. If you want to preserve your seed phrase into generations to come, I recommend checking out the Stampseed Titanium Seed Plate Kit, and you can get 15% off using my code BTC Not Crypto 15. And there's also a 5% link off for the Bitbox O2, which is a Bitcoin only hardware wallet. Thanks everyone for watching. Hope you enjoyed. Comments in the YouTube section, and we'll see you on the next episode of Bitcoin Not Crypto.